It's time for the big three. Three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shore, Director of Trading Education, Prosper Trading Academy. Good to see you both. It's Fed Day, but we're taking a look at certain names and specific trades. And Mike, you're looking at DOCU. What are you thinking here?
You know, I mean, DocuSign obviously has had a really rough year on something that you almost wouldn't expect it to be. But, you know, we're finally seeing this thing breaking out. And so, you know, I think if everything goes as expected this afternoon, I think that this has a lot of room to run to the upside. But I don't think it's going to be, you know, oh, we're just going to go up 25%. So I'm going to play this with a calendar to the upside.
Okay, yeah, because it really has been beaten down, but has been on a recent uptrend, as you've said. Ben, take a look at the DocuSign charts around $60 today.
What I'm looking at, first and foremost, is the 30-minute time frame. And if you take a look at the rally we've seen off the December lows, we're talking about 40.76. This week, all the way up to 61. So here you can see a pretty well-defined trend environment to the upside. This comes on the 30-minute time frame. I just want to show you what I noticed here along the way up. We've seen pretty well-defined these areas of consolidation that have formed, first and foremost, around 42, around 44, around 49, 58. Real question right now, will we find acceptance of this most recent move up to 61.60 and start to top out? But here you can see, again, two well-defined phases of development. This is how we determine trend through the lens of these auction market theories, these principles, these concepts. And again, you can see a well-defined trend environment to the upside. Taking a step back, look at what we've got here on the daily time frame. And you can see a couple things I want to point to. First and foremost, the move we just looked at up to 61, coming off the December lows. But notice how we took out the November highs. We also here just recently took out that end of September, beginning of October high. So again, this move's significant to the upside. I also noticed how, look at this, the December low held above this November low down around 39.57. So significant in itself right there. Let's clear this out because I want to show you that we actually have a bit of a double bottom which formed down here. And you can see that that's pretty well defined here. We also have a bit of a head and shoulders pattern possibly forming down here, with the head being this, again, low recently around 39.57. There you can see, again, the left shoulder around 45, that right shoulder, a very similar pattern. Taking a quick look here in terms of what I just said in terms of the double bottom, here you can see that right here. Again, you've got $42.50, $40 range, possibly a significant area to watch there. But I also just wanted to take one more look here for you to daily chart so you can see where things stand relative to the 50-day, relative to the 200-day moving average. Nicole, we're above the 50, below the 200-day moving average. Look at this, though. Shares of DocuSign still down 60% year to date. So again, this well-defined trend environment to the downside, still in a bit of a consolidation area down here, just getting a little bit of a lift off those D-slows.
Yeah, and I love seeing the head and shoulders, the double bottoms twice, and this breakout that now, you know, surpassing 50-day moving average, looking towards the 200-day moving average. And that's what you're betting on here, right? Mike, tell us about your trade.
Yeah, so I'm looking at I'm looking at the December 23rd versus Jan 6th 63 call calendar. That lines up really nice with the expected move through that front month expiration. So like I said, this looks like almost like a bleed up type of thing. And you know, just the way that the stock tends to move, it's not, other than the downside where it gaps down, it's not going to be a move back up to 52-week highs. So a small plotting move, have that theta work for you, and you won't get too hurt on the Vega. So not trying to make new highs here or anything like that, just or not even get to that 200-day moving average, but a nice little move up to about ideally the 63 strike.
Understood. Okay. Let's get to your next one. And we look here at eBay. You're talking about an iron condor. Are you feeling a little tepid about this one?
Yeah, you know, I do like the upside in eBay. It's tried to move up and it just hasn't. And quite frankly, on the two sides of the iron condor, I guess I'm more concerned about the upside, that it potentially could take off, but it really hasn't shown that. And so I'm going to play off of of the resistance at the 46 area, and then support. Not that I'm not worried about it, but I mean the support area. There's a really strong support area where it put in all those lows at about your 43 strike. So there's a little bit of bullishness to this iron condor. It's not exactly equidistant, but I like this just to be a little bit range bound. It's had its chance to move out, really hasn't, but it may a little bit. But I think we're going to be okay with this one.
Okay, at 44.21 today, and you talk about the fact that it's holding support at the 100-day moving average. Ben is going to be showing us these charts. Where do you see that support, Ben? Tell us about the charts.
Well, first and foremost, what I see is a big move up from November. We're talking 38 to 47, but look at what's been playing out since. We're kind of mostly range bound, not a lot of conviction one way or the other, just kind of hovering around this $45 level. And you can see we've got a pretty well-defined upper and lower extreme. We're talking, again, 47 the high, the lower extreme recently down around this 43 level. Now, as I take a step back and just kind of look at a bigger picture chart here, you can see this is a daily time frame, and what I noticed was a couple things, Nicole. First and foremost, I want you to see the well-defined trend environment to the downside over the last year, recently more sideways than anything else. But as I take a look at this chart, you can also see a couple things. One, a series of lower highs coming into play, right? We've got well-defined trend environment to the downside, so you expect to see that, right? Not only do we have lower highs coming into play, but let's color this out because I want to show you what we're seeing as far as the range that's going and developing as of right now, 52 to 36. So again, high conviction to the downside, sideways consolidation around this area. Let's take another step back and just show you where things stand as far as the 50-day, as far as the 200-day moving average. You can see we're below the 200-day moving average, longer dated above the 50. Again, kind of consolidating after some weakness here. Shares are currently trading down year to date around 33%. The one thing I noticed was a little bit of a price RSI divergence. As I look here, back earlier this fall, we saw the RSI taking out the highs from this summer, but look, price wasn't willing to participate to the upside, possibly rolling over here after that failed attempt here again at those August highs. Something to keep an eye on. Upper extreme right now, 50, lower around 35 if you're looking at this chart.
Yeah, amazing job with the charts. You flip through them so quickly, clear them out, put in new talking points for us. Mike, final thoughts here on eBay.
Yeah, I think that Ben and I agree. My range is a little bit tighter than his, but I agree with the range bound. I think that if you get hurt on one side or the other, most likely it would be to the upside.
Yeah, and he did talk about the price and RSI divergence too. Thank you for that one. And then last but not least, we're looking at PayPal. Here you have a put spread that you're putting together for us, but first give us the big picture on PayPal today.
Yeah, I mean, we finally seen a little bit of life in PayPal, but more importantly, at least for the signal that I'm looking at, is it has a really well-defined bottom again. So I think that something like PayPal, if it looks like, usually when you talk about PayPal, you look at Square, and Square is looking a lot stronger, but that means that PayPal has some room to move if the whole sector itself moves to the upside. So I'm just going to play more, not necessarily, well, it is bullish, but it's neutral to bullish. And, playing off of that support down at the bottom at your 71 level. So playing off of that and just saying we're not going lower than that, and then taking that premium and holding these for just a couple weeks.
Yeah, I want Ben to take a look at it and, as he thinks about your strategy here. Ben?
Let's begin, Nicole, with the 60-minute time frame. A bit of a chop for the most part, not a lot of conviction. I noticed first and foremost the move. Again, we've got the October high, which is up around 96. We're talking about the November low around 66, and how we, for the most part, have been kind of range bound since. So let's just take a look at that range established here with some lines and some levels. You can see again, I've got 96 as an upper extreme, 66 as a lower extreme, and basically everything within this is fairly random, not a lot of conviction, and I don't really put a lot of credit or weight into this. So let's take a step back, right? When in doubt, zoom out, I always say, and when you do that, you get a pretty well-defined high conviction trend environment to the downside, right? 310 all the way down to the recent lows that we looked at, and again, kind of range bound as of recent here after gapping lower. This came in reaction to earnings back in February through 150 since then. You can see kind of teetering around 80, 90. money. So let's just take a look here real quick in terms of what's been playing out. You can see high conviction to the downside because, Nicole, this actually comes after a double top, again, around this 310 level. You can see how we topped out there, and then areas of consolidation at 270. We're talking into the end of last year to begin this year. End of last year around 190. And then for the most part of 2022, we have been in a bit of a chop around 80. So I want to point out here again, you get these two phases of development, vertical down, horizontal, vertical down, and that constant transition, sometimes more well-defined than others, and in this instance, a very well-defined example thereof. Let's just real quick clear this out and then get into where things stand in terms of the 200-day, the 50-day moving average. Look, below both of those, the shorter and the longer dated. Shares of PayPal still down 61% year to date. Not a lot of direction here from the RSI one way or the other, which is about what you'd expect to see again as we've been in this range for the most part of this year. Came after some weakness to begin the year. Not what the bulls want to see, to say the least, as we head into the end of December.
That long-term chart is really disheartening for the shareholders. Where you see that big gap down, you said the vertical down, the horizontal vertical down. I mean, it's tough to stomach, and at this point now, you know, you got to go how you're going to trade it. And Mike, your final thoughts on the PayPal trade?
Yeah, I mean, you know, no joke that it's been a disaster this year. But, you know, at some point, and we've seen a test of those lows 3 times and big time rejection off of it each time. So that's why I'm relatively comfortable with that, as well as my kind of longer view of the markets, that I don't think that we're going to make new lows. And so, you know, that will hold that area for the, if necessary, the 4th time. But I think that, you know, a neutral to slightly bleed up is something, another one with those with PayPal.
Yeah, and how are you feeling about the market, you know, sort of pre-Fed, but more importantly, the next couple of weeks and next year, Mike?
You know, I continue to be optimistic. I think, you know, from the company's standpoint, that, and I mean all companies, not my company, that you know, the companies are actually doing quite well. The biggest thing that we have is, everybody talks about, is inflation. And we've seen our first kind of breath of clean air that we've seen in a long time from yesterday. And unless Powell steps all over himself this afternoon, I think that at the very least that we hold these levels, if not have some significant upside. And then, you know, you want me, you know, I don't know what's going to happen this afternoon, much less next year. But, you know, I'm not about to fade the United States. So if you want bullish or bearish, I'll be bullish.
Okay, I like that. Ben, final thoughts on the market, sort of pre-Fed, after Fed?
Oh, I think that we've got some key levels to watch right now. Nicole, as long as we're within the range, 3,500, we're talking the October lows. We've got August highs up around 3,500. I'm sorry, 4,300 to 3,500. It's 800 points of range, and there's a lot of opportunity within it, but it's very random price activity until we break out of those key levels. So again, I'm watching, we're talking the August highs up around 4,300, the October lows down around 35, and everything in between just is a bit of a chop.
Okay. Thank you both, Mike and Ben. Mike Shore, Director of Trading Education, Prosper Trading Academy, and our own Ben Lichtenstein. Thank you for the big 3 today.